Chamath Palihapitiya is one of Silicon Valley's most sought-after investors because he has an uncanny ability to figure out how things work. Looking for some insights on how to amass gains? What did Chamath Palihapitiya discover that led to his success? Hey folks, welcome back to the Chamath Palihapitiya Zone. In today's video, we're going to go through what Chamath Palihapitiya discovered and how it helped him build his fortune. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. Chamath oversaw the research team at Facebook that looked into online activity. Then 4 years later, he worked out how to develop that business from 50 million users when he started in 2007 to 700 million users when he departed. Now as CEO of venture capital firm Social Capital, he's working on a different project, cracking the code to understand how technology is transforming our society and hopefully making a few $1 billion in the process. Palihapitiya has quite a journey. As an immigrant from Sri Lanka, he grew up penniless with a flair for mathematics, a proclivity for gambling, and the odds stacked against him. Anything that popular, according to Palihapitiya, will surely attract a slew of copycats and wannabes. Chamath believes that his brand and investing expertise will not only make people wealthy, but will also serve to democratize finance and level the playing field for everyday investors. There's also the entire Buffett issue. He dreams of turning his business into a 21st century Berkshire Hathaway, complete with investor conference calls, analyst days, and its own must-attend annual meeting, all of which, in his opinion, will generate enough wealth to close America's wealth disparity. Palihapitiya was also a driving force behind the so-called meme stock craze, tweeting on January 26th that he purchased GameStop Corp. Call options fueling the stock's brief rally. He got out of the deal just as GameStop was about to go bankrupt, making a $500,000 profit that he donated to charity. Chamath estimates his net worth to be between $10 billion and $15 billion, far higher than his public disclosures reveal. The majority of his privately held insurance, software, and healthcare firms, as well as his SPACs and a new seeding program for amateur money managers, will become part of the holding company he's designing after Berkshire Hathaway. Only two things count, according to one of Palihapitiya's slogans: inequality and climate change. His aim as a social capital, he continued, is to invest in solutions for both. That's why he's placing a huge bet on securing vital lithium-ion battery supplies, so the US isn't at the mercy of China in its green energy initiatives. He estimates that the initiative will cost billions of dollars. To Chamath, amassing riches entails devising a clever, practical solution to a difficult practical problem and taking things slowly and methodically. You'll need to rewrite your brain to accept this. You have the courage to admit that it's difficult, that you haven't figured it out yet, that you don't know. But if you figure it out and have reasonable growth and compounding, which is the goal, in the face of difficulties, it's gradual and steady.
It took me into my early 40s to say, what is going to change this sort of lingering burning sensation in my stomach? And so I just went off to fix these things. And professionally, the most important thing is I said, I'm building somebody else's company. And I'm sure all of you guys, founders, have felt that moment where it's like, am I building the thing that I want, or am I building the thing that somebody else wants?
Start by tuning off your social media apps and giving your brain a rest, because you'll be more inspired to not be motivated by what everyone else thinks about you. It's difficult to imagine how all of this fits together. He says, what does publishing your fucking waffles on the internet have to do with me launching a business and accumulating wealth? This is how your brain is wired for instant feedback. It's the same brain you're utilizing to start a business with. So whether you realize it or not, whether you think it or not, whether you admit it or not, you're teaching your brain here. Recognize that these activities in which you spend hours each day are rewiring your brain and physiology in such a way that you must now use them to find out how to be productive in the commercial world. So unless you adjust this, you'll receive the same results as over here. Change this. Steve Jobs was anti-social media for a reason. Rather than trying to locate a firm that will be able to outperform the present top company, it's easier to acquire the winners of a certain industry and watch them expand over time. You can spend weeks scouring over every financial statement and drawing up theories on why you believe a company will outperform the top company in the industry. Wouldn't it be simpler and less stressful, and probably financially more rewarding, to just pick the top company? He asks. He emphasizes that investors must prioritize their demands. Setting up a solid list of needs and addressing them effectively is critical, so they can get the most out of them for a better future. There are some things that will remain constant regardless of the circumstances. According to the seasoned investor, investors must maintain their focus in order to keep their preparation for the good times intact and avoid being derailed by discouragements and disappointments. Monitoring data, according to the founder of Social Capital, is a good method to invest. His investment technique does not rely on technical patterns or stock charts, but rather on studying a company to gain a better understanding of it before investing in it. He acknowledges that there is no one-size-fits-all approach to valuing a firm. Most of us have no idea whether investing in an early-stage company will lead to outsized returns. As a result, the best way forward is to maximize the odds of success as an investor. It's not about guaranteeing success, it's about guaranteeing the best odds of success. Human psychology, according to PALIHIPITYA, has a significant impact on the kind of judgments that investors make. Investors have a proclivity to replicate what they are used to seeing and doing. In psychology, there's a concept known as repetitive compulsion. That psychological feature has great business implications, particularly in terms of investing. What it truly implies is that you're compelled to replicate what you're most familiar with seeing and doing. When you have a psychological blind spot, this concept of repeating compulsion simply repeats those loops over and over again. However, there are some guidelines that investors may follow to avoid acting irrationally, especially when everyone else is losing their cool, he argues. When investors purchase stocks, they should consider themselves to be purchasing businesses. Purchasing a business is similar to hiring a fantastic CEO to work for the benefit of investors and their families. Investment in firms that have the potential to grow tenfold in 10 years, don't buy it if you're not willing to do so. This does not imply that you will hit every ball out of the park. The idea is to become disciplined in a procedure, then repeat it without deviating. After investors have purchased a company, the most difficult decision is to make no decision and patiently wait to be proven correct. You are your worst enemy if you become too short-term focused. You will overthink, overreact, and underperform your own potential. PALIHIPITYA claims that the market constantly overreacts and underreacts based on investor psychology at any particular time, but he claims sanity always wins out in the end. As a result, by defining and following investment rules, investors give themselves the best chance of not losing momentum in times of upheaval, of finding and adhering to their convictions, and of allowing prices to catch up, he says. Growth may be slow, but if you believe in your goals, you'll get there. What's your mantra for investing? Do let us know in the comment section below, because we would love to hear from you all. Also consider subscribing to our channel for more related content on Chamath, his vision, and his investment skills, and turn on post notifications so that you don't miss on any of the future uploads. That's about it for today. We hope you enjoyed the video. If you did, make sure to smash that like button, and we'll meet again in the next one.